Neil, the recovery in the pound that we're seeing today, is that a function of investors saying perhaps things are not as bad as it seems when it comes to these Brexit negotiations, or is something else at play here?
Well, I think, you have, with the way the pound's moved around, it gets jostled around on these sort of reports, whether the likelihood is that we're going to get a no deal or a deal. And I think, they're relatively small moves in the greater scheme of things. But I think, the market is still betting just about on a deal being done. But then we see that pricing in of the risk of a no deal and the implications of that on the UK economy and on the balance trade terms and so on. And I think in the last few days there has been that added sort of risk factor thrown into the mix with this snap election talk. That's been sort of thrown out and rejected by the Conservative Party. But you have to look at this and look at can Theresa May actually get any kind of deal through? Her Chequers plan looks dead in the water, and so for her to be able to get a deal through Parliament, I think it may well require an election. So whilst she's been talking tough and so on, there's a Conservative Party conference to get through in the next week or so, and I think maybe that's why she's been talking tough. But ultimately, she might have to face that election in November, just in order to get some kind of semblance of agreement in Parliament.
I mean, because the news that we're reading from our side today is that now the main British opposition party is looking to essentially vote down any deal that May might be able to broker because of expectation it might not be the best deal for the UK. I mean, as an investor, how are you navigating through all this uncertainty in your hometown?
Well, I suppose we've gotten used to some of the uncertainty over the last couple of years. The interesting thing, I think, is that the idea of an election is important, and it does weigh on sentiment for sterling. But for UK equities and assets, it is a different picture. There's not only this thing of weaker sterling actually ramping up some of the earnings on the FTSE with a preponderance of dollar and euro earners on there. But I think the idea of a snap election at the moment, if it does go through, then there's a risk of a change of government, and some of the Labour Party policies are not particularly sort of amenable to capital, to companies. There's a talk of forcing companies to give up 10% of their equity to workers, for example. That's being closely looked at by Labour. So the snap election is not just a sort of political uncertainty thing. It's also to do with the prospect for a very anti-capitalist government in the United Kingdom, which would make attracting flows of capital and foreign investment all the harder. Which at a time of Brexit seems to be bad timing to the least.
And, the idea of that snap election, I see that it's being put forward with the option of actually staying within the Eurozone. What are the markets pricing in as the probability of perhaps us getting no deal or the UK getting no deal at all, because that is just completely off the table?
Yes, so I mean, any sort of attempt to force a second referendum or stay in the single market seems highly unlikely. Those are sort of very low down the pecking order. But that said, if we get a snap election, then we just don't know what the result could be. And if Labour does say, if they were to win that election and call for a second referendum or to effectively stay in the EU with being in the single market, then all bets are off. But I think at the moment the market is pricing in that there will be some sort of deal. It will be a compromised arrangement led by Theresa May and the government, and they'll get some sort of, maybe it's a Canada match type deal, free trade deal. But any sort of customs union or single market access that we talked about looks off the table. And as long as the deal is done, then fundamentally, the UK economy should be fine. It's just this worry that we have this cliff edge and exit and checks on the borders instantly. Nobody knows what to do. So that is the concern. But I think at the moment markets are still just about pricing in that we will get a deal of sorts.
Right, and then Neil, you spoke about the fact that the FTSE is benefiting from the weakness that we are seeing in the pound. Perhaps you can give us more insights into exactly which sectors are appearing to be rather Brexit friendly now, and where money is being made on your stock market.
Well, I think anywhere where we see strong dollar earnings, so for example the mining sector. I mean, it's come under a bit of pressure from trade concerns, of course, but the mining sector, oil, the big oil players. I mean, FTSE, of course, has made FTSE 100 is there's over 10% weighting is just Shell and BP. So that oil has an important impact there, and that the rally in oil prices, of course, are another factor in that. But any of these companies, the sort of safety plays like Diageo and pharmaceuticals, they're all largely dollar earners, and they can be sort of fairly immune. The sort of sectors, of course, that we worry about maybe in the event of a no deal Brexit, some of the UK focused banks, Lloyds and RBS, Barclays, Standard Chartered, HSBC are different kettle of fish entirely. And then some of the house builders, and of course retail, which is the UK retail market and the UK retail stocks have taken a hammering lately, and they would be significantly exposed to any new deal.
And lastly, your outlook for the pound, what's it looking like in the near term?
Well, we think that probably there will be a deal, and that would imply some upside for sterling, but perhaps it's limited by ongoing concerns around the full economic impact on the UK. But I think we could see sterling looking. It seems to be more exposed to upside risks now. As long as the deal is done, then there's a bit more left to travel up towards sort of high 130s. But in the event of no deal, then we have to factor in the potential for it to drop around 120, even down to 110 in fairly rapid order. So I think the problem with the pound, trading the pound at the moment, is very much that it's binary. It's also the coin whether we get a deal or no deal. So it's a hard one to price.
Of course. Neil, thanks so much for your time. As always, that was Neil Wilson, who's the Chief Market Analyst at markets.com.